Jai Shri Gurudev. Welcome back to my YouTube channel. This is Ravian, Assistant Professor, Department of MCom, BGS Institute of Management Studies, Chikkaballapur. Dear students, in this video I am going to explain the concept GST payments. GST, Goods and Service Tax payments. So how the GST payment will be done by the different persons in the different dates. So that's I'm going to explain in this video. So here are some points in which I am going to explain about the GST payments. Firstly, we should know what and all the payments to be made under GST. So what are the circumstances of payment of GST to the central government or to the state government, whatever it is, but how? So what is the GST and how the GST is split it into, what categories is split? See, under GST or under GST regime, the tax to be paid is mainly divided into three categories. Mainly three categories is divided under GST payment. One is IGST, second one is CGST, and last one is SGST. So this is the segregation of payment of GST through these three forms. So we used to pay GST to the central government as well as to the state government. First, before step into the payment procedure, we should understand what is this IGST, what is the CGST and SGST. I think you might have know what is IGST, CGST and SGST. See, it is very simple. IGST, which means interstate, and IGST integrated goods and service tax, integrated goods and service tax. See, that IGST is applicable when the interstate supply of goods or services is made. See, interstate supply of goods or services is nothing but when the location of the supplier and the place of supply are in the different states. And also in cases of export or import of goods or services, or when the supply of goods or services is made to SEZ, which means special economic zones, or that services, supply of goods and services made by SEZs, that is special economic zones. So these transactions is assumed to be interstate transactions. So these interstate transactions, as a seller has to collect the GST called IGST, integrated goods and service tax. And CGST means, and CGST, IGST is nothing but intrastate supply of goods and services, intrastate, within the state. See, when the location of the supplier and the place of supply of goods and services or location of the buyer are in the same state, are in the same locality. So in this intrastate transactions, a seller has to collect both CGST as well as SGST, CGST and SGST, that is central goods and service tax and state goods and service tax from the buyer or from the recipient of goods. The CGST gets deposited with the central government and the SGST gets deposited with the state government. So this is what the different categories of GST, IGST, CGST and SGST, and how these GST will be payable. See, so we already know that IGST will be collected and the amount will going to credited central government account, GST account, and central GST account also credited to the central government account, and SGST will be credited to the state government. And this IGST to be paid when the interstate supply is made. Interstate, we already understood what is interstate, whether it may be a transactions made between the states, between two states, or between India and other country. So these are what in imports and exports, all these transactions are considered to be interstate transactions. So for those interstate transactions, IGST is applicable. So these IGST is to be paid to the central government. And CGST, so that CGST to be paid when the making supply within the state, supply of goods and services within the state, and the amount will be paid to central government. And SGST also the same, that to be paid when the making a supply of goods and services within the state, and the amount will be payable to the state government. Okay, so this is under GST, the tax to be paid in these three categories. And nextly, circumstances. So through these circumstances we can understand how the GST will be payable. See, first circumstance is goods sold from Delhi. Goods sold from Delhi to Bombay. Goods is being sold from Delhi to Bombay. Okay, different places. So it's CGST, whether CGST is applicable? No. Whether SGST is applicable? No. Whether IGST is applicable? Yes. Why? Why only IGST is applicable in this first circumstance? Because it is an interstate transaction. Interstate transaction. The transaction is being held between two different states. So that integrated GST is applicable. And second circumstance is goods sold within Bombay. The goods is being sold within Bombay. Dealers, irrespective of the dealer, the goods is being transferred or sold within the state, within one state or within one city, that is Bombay. So whether in these circumstances CGST is applicable? Yes. And SGST, it is also applicable. What about IGST? No. IGST is not applicable. Why? Because the transaction is intrastate transaction. Intrastate, which means that supply of goods and services is made within the state, so that is considered to be an intrastate transaction, so that CGST and SGST is applicable. Okay, and nextly, last circumstance is goods sold from Bombay to Pune. Goods sold from Bombay to Pune. Okay, so here in this circumstance, CGST is applicable and SGST is applicable, but IGST is not applicable, because this is also is considered to be the same. The transaction is being held within one state. So that only CGST and SGST is applicable, but IGST is not applicable. Okay, so here in this way the GST is applicable. So I'll try to explain one example how these applicable. See, firstly, let me explain about IGST. First let me explain CGST. First, CGST, how the CGST is applicable with an example. See, we already know that under GST, so CGST is a tax levied on intrastate supplies, intrastate, within the state, so of both goods and services. So it may be by the central government, and the amount, these CGST will be governed by the CGST Act. The SGST will also be levied on the same intrastate supply, but will be governed by the state government. And this implies that both the central and the state governments will agree on combining their levies with an appropriate proportion, and for revenue sharing between them, between the state government and the central government. See, however, it is clearly mentioned the two in the section 8 of the GST Act. GST Act 2017, the two in the section 8. Section 8 clarifies that the taxes be levied on all intrastate supplies of goods and services. No, the rate of tax shall not be exceeding 14%. It should not be exceeding 14%. It should not exceed 14% because the maximum GST rate is 28. So that if the GST rate 28% is split into central and state, it will be like 7 and 7. So like that. Okay. So likewise, no, it should not be exceed 14% each. So 14 for state government and 14 for central government. So total it will be GST rate will be 28%. If the GST rate is like 14%, 7%, 7% like that. Okay. So here under CGST, so under CGST, so that amount will be credited to the central government, and under SGST the amount will be credited to state government. Let me explain one example. See, let's suppose Rajesh is a dealer in Maharashtra who sold goods to Anand in Maharashtra only. I repeat, Rajesh is the dealer in Maharashtra who sold goods to Anand in Maharashtra, that worth rupees 10,000. Worth rupees 10,000 rupees. The GST rate is assume 18%. The GST rate is 18%. So which comprising of CGST rate is 99%, because the total GST rate is 18%. So which will comprising of CGST 9% and SGST rate is 9%. So in such case, the dealer collects rupees around 1,800 rupees, because 10,000 is the value of transaction and 18% is the rate of GST, and that amount will be 1,800. In that amount, 900 will be go to the central government and 900 will go to the Maharashtra government, because the transaction is held in the Maharashtra. So both CGST and SGST will be applicable in this transaction, because this is the transaction where intrastate concept is applicable. Intrastate transaction. In the intrastate transaction, the amount of GST will be splitted into CGST and SGST. SGST will credited to state government and the respective state government, and CGST will be credited to the central government. Okay, so this is what an example, and we'll go to the IGST. See, CGST and SGST are the levied in the same transaction within the state or intrastate transaction, but IGST is different. IGST is applicable whenever the interstate transaction or exports is being made or imports is being made, so then only that integrated GST is applicable. See, under GST, we already know that IGST is a tax levied on all interstate supplies of goods and services, and also will be governed by the IGST Act under GST. Okay, and IGST will be applicable on any supply of goods and services, the two in both the cases of import into India and export from India. Okay, and I think so the tax will be shared between the central and state government. So if in certain cases, so if the exports would be zero, if the exports are zero rated, then the split it into state and central government. So let me explain one example for the IGST for better understanding. So here consider that a businessman the businessman Rajesh from Maharashtra had sold goods to Anand from Gujarat worth rupees 1 lakh. Businessman Rajesh from Maharashtra, understand carefully, businessman Rajesh has sold goods to Anand. So he has been sold goods to Anand, who is located in Gujarat. So Mr. Anand is from Gujarat and Rajesh is from Maharashtra. The value of goods transacted is 1 lakh. 1 lakh. The GST rate is applicable 18%. Assume the GST is applicable 18%. And this comprised of 18% IGST. See why? Because in this case, the dealer has to charge rupees 18,000 as IGST because the transaction is interstate transaction, and that IGST will goes to the central government. Total it will be 1 lakh is the transaction. The amount rate of GST is 18%, so totally that will be 18,000. so that 18,000 will be goes to central government. Okay, I think you might have understand this concept with an example. Okay, so whenever the concept is simple, whenever the transaction is made within the state, that is CGST and SGST is applicable, that is payable to the different state governments as well as to the central government. And if IGST, if interstate transaction is happened, then IGST is applicable. That IGST will be payable to the only to the central government. Okay, I hope you understand. And then we'll go to next. Apart from the above payments, that is IGST, SGST and CGST, so a dealer is required to make these payments, that is tax deducted at source. I think you might have know what is tax deducted at source. Tax deducted at source, which means it is one mechanism where the tax is deducted by the dealer before making the payment to the supplier. So before making the payment to the supplier, the person will going to deduct the tax himself. Okay, and the TDS will be payable to the respective governments. Okay, here, say for example, for TDS, a government agency gives a road laying contract to a builder. The contract value is rupees 10 lakh. Assume the contract value is rupees 10 lakh. Contract value is rupees 10 lakh. Okay, construction of road is the contract which is given by the government. When the government agency makes a payment to the builder, TDS at 1%, which will be amounts to rupees 10,000, will be deducted and the balance amount will be paid. See, total the transaction value is 10 lakh, 1% is the TDS. So that government will going to the agency makes a payment to the builder by deducting TDS 1%. So government will deduct TDS of rupees 10,000 because 1% is the TDS rate, and this will be automatically credited to the government. Okay, so this is how the TDS is applicable. So before making payment to the supplier, the tax will be deducted at source. So that is what tax deducted at source. So this is also one payment made in a or payable in a GST regime. And nextly, tax collected at source. Tax collected at source. See, this is also one mechanism, TCS we call, in short TCS, tax collected at source. See, this is mainly for e-commerce aggregators. This is applicable for mainly e-commerce aggregators who have been involved in e-commerce transactions, online transactions. So it means that any dealer selling through e-commerce will receive a payment after deduction of TCS. So after making deductions, whatever the percentage it is, at the rate of 2%, usually at the rate of 2%, like this. See, this is what tax collected at source. So this is also one kind of payment which a dealer is required to make to the government under GST regime. Okay, and nextly, reverse charge. I think you might have already know this, what is reverse charge is. Reverse charge is one mechanism where the liability of payment of tax shifts from the supplier of goods and services to the receiver of the goods and services. So that supplier will transfer the liability to the recipient of goods, or receiver of the goods, or the buyer. To know, see that reverse charge mechanism is applicable when the registered seller unregistered seller used to sell a goods to the registered seller. So unregistered seller is going to sell the goods to the registered. So then reverse charge mechanism, or vice versa. So reverse charge mechanism is applicable in such a cases. Okay, so these are the payments is to be made in the GST regime. So one is the IGST, second one is the CGST, third one is the SGST, and nextly TDS, nextly TCS, and lastly reverse charge. So these are the payments is to be made, and along with that, so the dealer has to pay interest, penalty, fees, and other payments if only applicable. If whenever this interest is applicable, penalty is applicable, or any other fees or payments, if applicable, only these payments is to be paid under GST regime. Okay, see, let me explain with diagram. See, normal GST payment process, how the GST payment process will be done. So here, supply of goods and services. See, that GST will be directly payable to the government, and the GST is collected from the receiver of goods and services. So the supplier will collect the GST from receiver of the goods. Goods is supplied to the receiver. Price of the goods and services is paid by the receiver, and the GST also paid by the receiver of the goods to the supplier. Okay, and that supplier will pay GST to the government. Okay, so this is what normal GST payment. And GST payment in case of reverse charge, how the reverse charge is applicable. See here is the diagram how that is applicable. So here, supplier of goods and services will supply the goods and services to the receiver of the goods and services, and receiver will going to pay the GST to the government instead of supplier. Why? Because the supplier is not registered dealer, receiver is the registered dealer. So that reason, so receiver of goods and services will directly pay the GST to the government. Okay, so here supplier will supply the goods and price collected by the receiver of the goods. Then the GST is payable by the receiver of the goods, but not by the supplier of the goods. So the GST is paid to the government by the receiver of the goods. So this is what reverse charge mechanism. Okay, so here normal payment and the reverse charge mechanism. Okay, and next we'll go to the next concept, that is this is already completed. Next is how to calculate the GST payment to be made. How to calculate the GST payment? What is the criteria? See, usually what happens, the input tax credit should be reduced from outward tax liability to calculate. And to calculate the total GST payment to be made, we need to take into consideration all these payments. See, usually input tax credit in the sense, if A sold goods to B, if B sold goods to C, so automatically the GST what is paid by A will be credited to him. Okay, so like that the chain will goes till the final customer or final consumption of the goods and services. So likewise the input tax credit will be applicable. So here how to calculate that GST payment. So what amount is to be made, how to calculate this is in the sense, so TDS or TCS will be reduced from the total GST to arrive at the net payable figure, and interest and late fees, if any applicable, will be added to arrive at the final amount. First, that under total GST, TDS or TCS will be deducted, and that will be reduced to the total GST. Then the if any interest or late fees is applicable, that will be added to the total GST payable amount. And nextly, ITC, input tax credit, cannot be claimed on interest and late fees. Both interest and late fees are required to be paid in cash. So that late fees and interest penalties and all those things has to pay only in cash, but not be adjusted and not be claimed in the ITC. Okay, so input tax credit, penalties and interest should not be adjusted with ITC in the sense input tax credit. Okay, and the way of calculation is to be done different. It is different for the different types of dealers. So usually the different dealers used to calculate payment of GST in different ways. Okay, so first let me explain about regular dealer. So the regular dealer in the sense who is usually pays the tax to the government, GST to the government. See, the regular dealer is liable to pay GST on the outward supplies made and can also claim input tax credit on the purchase made by him. See, usually what happens, the regular dealer used to pay a GST on what? On outward supplies, which means on supply of goods and services to others. On that goods and services, that goods and services which is supplied by the regular dealer, he can claim a input tax credit. The two, whenever the purchases is been made, then input tax credit on the purchases made by him can be claimed. And the GST payable by the regular dealer is the difference between the outward tax liability and the input tax credit. Okay, so whatever the input tax credit is been credited, that will be in the account of that dealer. Okay, and what is the amount is to be paid, that will be reflected in the dashboard of the GST dealer application. Okay, or that website. Okay, that will be shown amount of tax liability will be shown in that, and if you deduct that tax credit, input tax credit, then the final liability will be shown, and that automatically deducted from the account of the dealer. Okay, so this is how the GST payment will be made by the regular dealer. It's very simple. So GST will be payable by the regular dealer if any ITC is applicable, input tax credit is credited to the dealer's account, that will be deducted. Okay, and the total GST payment is 10,000, total liability. Input tax credit is credited 5,000, and the tax payable is balance 5,000. Okay, 5,000 is to pay. Okay, that is the case. And next to composition dealer. See, composition dealer, the GST payment for a composition dealer is comparatively simpler. A dealer who has opted for composition scheme has to pay a fixed percentage of GST on the total outward supplies made. So these composition dealers in the sense who opted for integrated GSTs. Okay, and we used to pay GST at once in a large amount. Okay, so they used to pay a GST. If they opted for a composition scheme, has to pay a fixed percentage of GST on the total outward supply of goods and services in the year. Okay, that is the case. So here GST is to be paid based on the type of business of a composition dealer. How that composition GST is applicable. See, type of a business here, manufacturer and traders. See, manufacturer and traders has to pay fixed percentage, that is 0.5%. SGST 0.5%. Total it will be 1%. And restaurants not serving alcohol. Okay, so the restaurants which are not serving alcohol is not comes under GST. Okay, so that is applicable excise duty. So that here restaurants which are not serving alcohol, fixed CGST is 2.5% and fixed SGST is 2.5%, and total it will be 5% is the composition GST. Okay, and the composition scheme is not applicable to the service providers. Okay, so it's for the service providers, it is not applicable, only to the manufacturer or trader and restaurants which are not serving the alcohol. Okay, so this is composition GST. So composition GST is applicable in a fixed percentages. Okay, so this is how the payment will be made. And next, who should make the payment? Who is responsible to pay the GST? See, these dealers are required to make a GST payment. Firstly, a registered dealer. We already know that word is who is a registered dealer. So registered dealer is required to make a GST payment if GST liability exists. Okay, and secondly, registered dealer required to pay a tax under reverse charge mechanism. See, in a normal cases, if the registered dealer is having registered, if he used to sell a goods to and services to the person who is been registered under GST, so he will going to pay a GST. If the if he used to sell the goods for unregistered dealer, then reverse charge mechanism is applicable. So then also that person registered dealer is required to pay the GST. And then the e-commerce operator, any e-commerce operator who is involved in the transactions, the e-commerce transactions. Okay, so e-commerce operator is required to collect and they has to pay TCS. See, usually the e-commerce operators used to collect the TCS, that is tax collected at source. So they used to pay tax to the government instead of the recipient of the goods and services. Okay, and the dealers is required to deduct the TDS, tax deducted at source, and they has to pay that amount to the government. Okay, so this is what the payment who should make the payment of GST: registered dealer, e-commerce operators, and the dealers. E-commerce operators will use to collect the GS in TCS, and the dealers has to pay TDS amount which is collected at source, and the registered dealer, they has to pay regular GST payments. Okay, and nextly, how to make GST payment? What is the procedure? How to make this GST payment? See, GST payment can be made in two ways. One is payment through credit ledger, and secondly, a payment through cash ledger. Okay, first, what is this payment through credit ledger? See, the credit of ITC, which means input tax credit, can be taken by the dealers for GST payments. Input tax credit, whatever the tax is being credited, input tax credited to the dealer account, that will be useful to make a payment, that is GST payment. The credit can be taken only for payment of tax, and the interest, we already know, interest, penalty and late fees and any fines and penalties will be payable in cash, but not by utilizing this input tax credit. Okay, so that input tax credit only is used to make a payment of GST, not being used to payment of any penalty, interest or fees and so on. Okay, that payment can be made through this credit ledger. That credit ledger will show the amount of input tax credit. Okay, input tax credit, so that will be shown input tax credit, and by using that amount, they has to pay the amount of GST. Okay, that amount should not be used to pay the penalty and interest and all those things. Okay, so here that credit ledger, it is, this is what self-assessed in monthly returns, and any person or any dealer's self-assessments will be reflected in that credit ledger, and that credit in the ledger can be used to make a payment of tax only, and no other amount such as interest and penalties and fees, etc. Okay, and nextly, payment through cash ledger. So payment through cash, see, GST payment can also be made in online or offline. So the mode of payment is online or offline. Okay, but how this payment will be made? Through cash credit, or credit ledger. Okay, or cash ledger or credit ledger. Here the cash ledger is used to pay through online or offline. The challan has to be generated on GST portal for both online and offline GST payment. Okay, so these are the two mechanisms in which the GST payment can be made. One is through credit ledger, another one is through cash ledger. Credit ledger, in the sense, the credit ledger will show the monthly assessment of the person, a dealer. Okay, self assessed amounts will be, and self assessment returns will be reflected in the credit ledger, and that amount will be shown the amount of ITC, which means input tax credit, and that amount can be utilized to payment of the GST, but not for the payment of interest, penalty, fees, and all those things. And payment through cash ledger is the ledger which is amount which is deposited by the dealer, and that cash can be paid through online or offline. If they have opted for offline, they has to generate on application challan has to be generated in the portal, GST portal. Even for the offline, even for the online, challan has to be generated, and by filling that challan they can pay the amount of GST. Okay, and nextly, where the tax liability is more than 10,000 rupees, it is mandatory to pay taxes online. Okay, if the payment of tax tax liability amount less than 10,000, no need to pay through online. They can fill the challan and they can pay. Okay, if the payment of GST amount is more than 10,000 rupees, exceeding 10,000 rupees, it is mandatory and it is compulsory to pay the taxes through online only. Okay, it is very important thing, that is, if the tax amount of tax liability is exceeding rupees 10,000, it is mandatory to pay the GST through online only, not through offline. Okay, and next thing is, what is the penalty for non-payment or delayed payments? If any dealer, if any e-commerce operator, or if any regular GST payer or the assessee, if fails to pay the GST in time, what is the penalty? See, if GST is short paid, which means less amount is been paid, 10,000 is the liability but 5,000 is only paid. Okay, if unpaid, say for example 10,000 is the tax liability, 10,000 is not been paid by the dealer, or paid late. Okay, these are the three circumstances. See, short paid, which means less amount paid, unpaid, which is fully not paid, and paid late. Example, 20th is the due date, paid in next month, so that is a late payment. And interest on this payments will be at 18% rate. Okay, 18% interest is required to be paid by the dealer if they paid lesser amount, or if they fails to pay the GST fully, or if they paid the GST in a later date, okay, than the due date. So this is a penalty, 18% is required to pay. And nextly, also a penalty to be paid, the penalty is higher of rupees 10,000, or 10% of the tax short paid or unpaid. If example 10,000 is the tax liability, let me explain. 10,000 is the tax liability. If 10,000 is not paid, total 10,000 is not been paid to the government. Okay, 18% will be interest for the not payment of GST. 18% in the sense 1,800. Okay, 1,800. In that 1,800 is the amount of interest. 1,800 interest is to be paid. So but here the second point says the penalty to be paid, the penalty is higher of rupees 10,000 or 10% of the tax short or unpaid. See, maximum 10,000 or 1,800, whichever is applicable, whichever is higher, whichever is applicable, whichever is lesser is applicable. So here the 1,800 is the lesser amount, so 1,800 is to be paid. Say for example 1,80,000 is the amount. 1,80,000 is the penalty. Okay, so 1,80,000 is not paid. In that cases, 18% will be calculated. Whichever is less will be payable as a penalty, either 10,000 or the amount which is applicable as a penalty at the rate of 18% interest. Okay, so this is how the penalty will be levied. So here is the important information. There is GST payment due dates. So it is based on the years, but in the year 2020, due to the pandemic, the due dates is been postponed to the next months, but here is the usual due dates. General, for the general dealers, 20th 20th day of the next month. For the example, January transaction is held, for that in the month of February 20th they has to pay the GST. And for non-resident, 20th day of the next month, same. And for TDS deductor, who will deduct the TDS? E-commerce traders. Okay, so they has to pay the tax on 10th day of the next month. Okay, 10th of the next month. And for the composition GST, 18th day of the next month of quarter, for every quarter, 18th of next month. Example, 3 months is being completed, 3 months once, 1 quarter. Okay, so example, April, May, June. After completion of June, next month, in the month of July, 18th July, they has to pay the composition GST. Okay, and for input services distributor, 13th day of the next month is the due date for the filing GST returns. And for TCS collector in the sense tax collected at source. Okay, for them, 10th day of the next month is the due date for the payment of GST or for filing or GST returns. Okay, so this is what GST payment due dates. And this is all about GST payments under GST regime. Hope you understand. Thank you all. Jai Shri Gurudev.